Wow, what has just happened to Tesla? Tesla is down 8.28% today. Why is this the case? Well, let me tell you. So, this could be due to a multiple of factors. If we look at the 5-day chart of Tesla, as we can see, we've hit multiple all-time highs, following last week and beginning of this week. Now, this could just be a simple correction in the market, is to be expected after we have seen such a huge increase over the past month. As you can see, even after this 8% drop, Tesla is still up 29.9% over the past month. Now, this is a bit detached from reality because the company itself hasn't suddenly grown 29% in the past month. No, this is just a stock changing to fit current market expectations about the future outlook of the economy, and that segues perfectly into the next part. So if we look at the QQQ, which is basically it's basically a tracker of the Nasdaq top 100 stocks. So this is the reason why I'm using this over the S&P 500 is because it's more weighted heavily towards the tech sector, which is what Tesla is under. And as we know, Tesla has a beta of about 2, which basically means if the stock moves by a percent in one direction, you can expect Tesla to be more double that. I think Tesla's beta is closer to 2.3, 2.4. So a move down of 3.61%, you can see times that by 2.3, 2.4. So if Tesla's in line with that, it's pretty normal and there should be nothing to worry about. Obviously not financial advice. But why is the market down 3.61%? Well, the Nasdaq anyway. Well, if we go into this, Fed cuts by a quarter of a point. You'll be like, okay, yeah, quarter of a point Fed cut, that's good. Well, the problem with this is, it's being decreased at a slower rate than the market was expecting. Obviously, earlier on in the year, we had a decrease of 0.5%, which was more than the market was predicting. So after that 0.5% decrease, the market's like, oh, okay, they're going to continue to cut. They're confident about the economy. Where I think that 0.5% decrease was mainly due to the jobs report that came out at the time, which was very weak, and they wanted to get ahead of it and make sure, investment still keeps coming and jobs doesn't unemployment doesn't rise too fast, and don't want to actually enter a recession. Jerome Powell says, that they think they've avoided a recession, but the market is just is saying because Jerome Powell can say one thing, but then mean the other. Because if he actually says, "Oh, we're entering a recession," then the self-fulfilling prophecy will actually go through, and we will actually go into recession. But if he says no, we're fine, then it's less likely that we're actually going to go into recession because the market's trying to weight the probabilities of that, and the market can basically tell what the probabilities are. So if it was half a percentage point or more than that, then the market's like, okay, yep, back into growth mode. Obviously, inflation has still been a bit sticky. Obviously, you don't want to enter hyperinflation where you keep on getting wage increases, and then you get more inflation, and you get more wage. We don't want hyperinflation. That is, the spiral where it just goes completely out of control. The Fed are doing the best they can to avoid that. So if we look at these recent Fed rate reductions, obviously we had the we had the half a point, and we had another 0.25, and then we got another just got another 0.25. Obviously, what the market is looking at next year. What are the cuts going to be? How quickly can we get back to this 2%, 1% down here? Because that's ultimate growth mode. Obviously, it's unlikely that we'll go back to 2020 levels, or even if you go back to 2012, 2013, 14, those periods, those are completely they're almost too low, and that is when you do get inflation. So obviously these increases here were healthy, up to a healthy level, and obviously COVID happened, they had to reduce them. If we can get back to these, 2019 levels, then the economy should be doing very well. But obviously the market is basically priced in that it's going to take longer to get to those levels. And that is ultimately what the main reason for this repricing. Obviously, we could be seeing more moves after the fact. Obviously, 8.28% is the first day. People could be like, "Oh, panic selling now, trying to get out before it goes down too low," and then that could leave a downward spiral. What I'm doing with my shares, I'm just keeping them. Like, I can't expect them to go up forever. They're up 30% over the past month. So, and now I'm just like, okay, I got them at a little bit of a discount. I was getting really annoyed actually, because obviously my long-term goal is 500 shares. That is, ever since I started buying Tesla shares, I was like, okay, that's where I want to get, and I'm at 450 or just over 450, and just seeing the amount of money that I'm gonna have to spend to get those extra 50 shares is kind of disheartening. But so yeah, I'll take this little dip to buy an opportunity for me personally. And obviously this is not financial advice. You don't just automatically follow what I do. Do your own research. I've consistently done lots of research into Tesla. That's why I'm confident I'm going to buy. And obviously I'm not going to just put loads of money in. I'm going to continue to dollar cost average, and as I get my paycheck every Friday, just buy a share here, share there, whenever I have free funds available. Anyway, thank you guys for watching. I hope this, puts you at ease a bit. This is, 8% is normal when it comes to Tesla. It's nothing to worry about. Obviously, you're expecting a pullback after this massive run up we've had over the past 6 months, and when you combine that with the fact that now the market's pricing in Fed cuts coming in slower than what was priced in, because obviously Fed cuts were pretty bearish, and then they got revised after the half a basis point decrease, and now obviously they're getting revised again. So this is just normal market stuff. I do not recommend trying to time the market. I realize that I'm not intelligent enough to do that. I've tried to time the market. I've tried to do the whole sell high, buy low type thing, but I've actually lost money, ended up losing money doing that just because of my emotions, and it's actually like that, seeing my money go down, and it's just, yeah, I just dollar cost average. That's how I've seen the best results. That's how I'm up nearly 100% in my portfolio. So that's what I'm going to continue to do. I'm almost going to not even look at the price, when it's like that. I'm just not going to worry about it. I'm only going to look at the price when I actually have money to buy. So yeah, don't worry guys. Tesla is just fine. The company hasn't just imploded. This is just normal market repricing after run-ups to do, and all sorts of stuff. So yeah, don't worry. Obviously, nothing presented in this video can be taken as personalised financial advice. Everything said is my opinion. Anyway, thank you guys so much for watching, and please make sure to like, subscribe, share with your friends. And that's it for me today. I'll see you in the next one. Goodbye.